Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, you can see they're trying to engage the upper band here on the daily chart again. They engaged it yesterday. Upper band 62 right now. It's probably going to take 63 to 65 to engage the band and create potentially another upper band ride. So how do we get here? Well, it's pretty simple. It's the stuff that we've talked about. We get back into Friday. They went down and they tested the daily mid band, the 20-day simple moving average here. They did here. They did here. They didn't convert it. They tried during the holiday session to hold the 9-day and the weekly at 69.5 and keep that held all the way through Globex. They couldn't get it. So by the time you get into Tuesday, then you're testing weekly pivot. And aside from this test right here, that basically was as low as 72.25, basically three handles, they couldn't hold that. And once you can't hold this, it is permission to walk and then run to the upside. So for us yesterday, it was a one trade day. They open the market, they come back, they do 38, 10, 11, 12. They can't get it done. We tried 12 once, we got stopped out even. We tried 12 quarter, and that was it. Off you go. And what we ended up doing with the runner was just putting a 10-handle trailing stop on, and we got stopped out with about 2 minutes to 4 o'clock. And we talked at the time about how they really wanted to go ahead and print 50 yesterday. They were able to do that. They did a little bit more. They traded as high as 52.5. In the overnight, they tested 46 to 48 a couple of times. We ended up long 48.5. We got 10 handles out of that and got stopped out. We got back long 51.5. We just got stopped out of that, so we're flat, and we'll be flat until the open. But it begs the question, why do we keep going up? And it goes back to the same stuff that we've been talking about for months. Until the bears can convert lines on this chart that matter and keep them converted on a closing basis and through another Globex, shorts are going to continue to be trades into dip buys, and they're going to get taken up. And if they keep getting taken up in this fashion and the bears keep doing nothing about it, then it is a gold-plated excuse to go do something like 3,900. And don't shoot the messenger. It's a byproduct of the fact that the bears simply cannot push back for any period of time. So what you don't want to be doing here is you don't want to be spending your days, I think this is the high. I think this is the high. I think this is the high. I'm going to short here. I'm going to short here. I'm going to short here. No. If you can't bring yourself to buy it, then you have to at least do yourself the favor of getting out of the way. Just don't mess with it at all. Until the basic price dynamic changes, and until the bears assert themselves and follow the rules that we have laid out, this market will continue to go up, shorts will continue to be trades, dips will continue to be bought, and we will continue to head higher. That's the bottom line. So as you look at this, I don't pick sides. I don't care one way or the other. What I want to do is I want to go in the direction of whatever's working. And whatever's working right now is short once in a while for a trade. But once the bears start to stall out and you start to get momentum to the upside, you have to be there. So now we have Thursday and Friday left. We always talk about directional days at the end of the week. If you're getting directional days at the end of the week, well then 3,900 is pretty damn achievable, unless the bears can do something about it. So we're trading 50.75 right now. That's sitting right on top of the hourly midband. Volume weighted average price and the proprietary moving average are sitting right at about 53. 5-minute midband is about 53.5. So 50 to 54 is going to be important off the open. I would suspect, my instincts say, the tape's got to be a little tired. I would not be surprised if it took a little bit of a break here off the open. Unless it's going to do what it did yesterday, which was ring the bell, Pavlov's dog, and off we go. The tact you have to take with regard to price action like this, unless there is some news event that's going to knock it down. They have to take you out of a long to get you short. They have to take you out of a long to get you short. Because what's been happening is these dips have been bought. They head to the upside. You can't be saying, okay, well, I'm going to short it until they show me that it's going to head higher. Well, what they're going to show you is about 5 to 10 handles in your face. And by the time you adjust to that, you've missed the opportunity to get long. You've taken a big hit on the short side. Your brain has taken a bigger hit, which is what's really important. And then you're kind of sitting there stunned, and off it goes. So they've got it. If the price action is going to stay the way it's been, they got to take you out of a long to get you short. It's that simple. It's that simple. All right. Everybody have a fantastic day. Be safe. Be healthy. Take care. You want to learn how to do this? You want to learn how to trade this stuff? You want to do it the right way? Come check out the room. Trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.